now, let's join Maggie Linton on Sirius XM Urban View.
Well, welcome back. Tomorrow, we'll chat about gourmet chocolates with Memphis-based chef Philip Ashley Ricks, founder and CEO of Philip Ashley Chocolates. Guys, they are gorgeous. Plus, we'll learn about co-opetition from attorney, musician, composer, inventor, and theorist Frank Ashrow with his book, A Primal Wisdom. Want to remind you also that you've got to go vote, which we are going to talk about tomorrow, and we are going to be inviting you to call in at 10 o'clock during our 10 o'clock first half hour to tell us why you vote and also when you first voted. There'll be more about it tomorrow, but I'm telling you folks, 10 o'clock tomorrow, and you have an opportunity of maybe getting on our station. So we'll tell you more about that tomorrow. But we continue now with guidance for dealing with student loan debt. Glenn Smith is head student loan counselor with GuideWell Financial Solutions, a.k.a. the Consumer Credit Counseling Service of Maryland and Delaware Incorporated. They're celebrating 50 years of service. And let me tell you about them. I used them years ago, about a year after I moved to Maryland. They were good then, and they still are now. Welcome, Glenn.
Good morning. How you doing this morning?
I'm doing great. I didn't have student loan debt, but, I'd had a job. I thought it was going to be good for 2 years because that's what my contract said. Year later, because we were up against Oprah Winfrey and Richard Sherrod, they kicked us out the door. Whew.
Okay. That must have been in Baltimore, Channel 13,
I know. Well, I was at 11 at that point. But, yeah, I was the competition. Oprah was at 13. But it's amazing what good service you all do. But, student loan debt, ooh-wee. It is a real issue here in America, isn't it?
It has come on like the mortgage crisis did back about 7, 8, 9 years ago. It's kind of snuck up on the economy, and people weren't looking at it before they know it. It's bam. It's like everyone's in student loan debt.
Yeah, and they're talking about over $1 trillion in student loan debt.
Yeah, we have reached $1.3 trillion. Student loan debt has surpassed credit card debt. The only debt that's out more than student loan debt in the country right now is mortgages, and they're slowly creeping up on mortgages as well.
Wow. All right, let's talk about the main thing is what you do before you start getting in debt, because the choices made early have such an impact about what happens later.
Exactly. I think a lot of times consumers, when they go to school, they just so engulfed in just getting a degree and going to a specific school that cost takes a back seat. And I think we have to do a lot of students have to start doing feasibility studies to learn that when they take on so much debt, what they're going to have to repay when they complete school. Is the position that I'm going for is going to allow me enough money to create a standard of living, pay a rent or a mortgage payment, gas and electric, telephone, car, as well as enough for my student loans. Because what I'm seeing on the market on this side is people with $800, $1,200, $1,500 a month in student loan debt they're paying every month. And a lot of kids are not leaving the nest. They're staying at home trying to get these student loans paid down. But the government is trying to give a lot of assistance because they realize the problem. They're trying to be proactive instead of reactive like we did with the mortgage crisis. So what President Obama has done, he's created a lot of programs such as public service loan forgiveness, pay as you earned, and he came back with a better payment called repay as you earned, where you can use less of your income towards student loans. In the state of Maryland, they've got programs if you got over $25,000 in student loan debt, they'll assist you in getting a mortgage, get you a lower rate as well as down payment assistance. So the government is trying to do what they can because they see the problem that's at hand and they're trying to avoid the situation we had with the mortgage crisis.
All right. Folks, needless to say, the phones are open. This is a man who knows his stuff. And, of course, you can call at 866-801-8255. Once again, that's 866-801-8255. All right, Glenn, let's talk about looking at loans before you even get in, because there are so many choices. And a lot of parents are putting their houses on the line, too, to help that student out. But there are so many different places to look.
Exactly. I think the first thing you do, you want to try to get as many scholarships as you can. And the time to apply for scholarships is like yesterday. not when you graduate. Okay, now I'm going to school in the fall. Let me see how many scholarships I can get. You got options like churches, organizations, parents might bring to schools, banks, writing scholarships is the number one way you want to get to try to pay for as much as you can. And some parents have, like the state of Maryland, we got the 501 program where you can save money towards college. Also, you want to try to get maybe a part-time job to help offset that cost. And if you do have to get any type of loan, I definitely recommend getting a federal loan over the private loans. Both loans are non-dischargeable through bankruptcy, but with the federal student loans, you have a lot more options if life deals you a bad hand in the future. If you get laid off, you get sick, you get hurt, you can get payment programs based on your income. And some people payment programs right now are $0 to $5 per month because they may be laid off, in between jobs, sick, hurt, and they're not getting reported to the credit bureau very negatively. Whereas with the private loans, you are strictly at the mercy of the actual creditor. Some creditors work with you, some won't. But like I said, you have a lot more options with the federal loans. Right now that they're doing direct loans only. With those particular loans, you have an option of public service loan forgiveness. So if you're working in certain type of fields, if you're a police officer with a student loan, if you're a teacher with a student loan, a correctional officer, you work for a nonprofit 501c, there's a possibility that you could be getting your whole loan totally wiped out.
And I've over the years, I've had friends who went to less dense populated areas and had a lot of forgiveness for their loans because they were either teachers or doctors.
Exactly. Yeah, doctors, teachers, they all qualify. But President Obama has opened it up to a lot of other industries as well, the public service loan forgiveness. Then there's also what they got a new program called student loan forgiveness. There's a major difference between forgiveness and cancellation. What student loan forgiveness is that they realize that everybody who got a large student loan is not making enough money to pay that student loan as well as live comfortably. So they'll put them in what's called an income-driven repayment plan, which may last for 15, 20, or 25 years. But what happens is after the end of that term, there's a lot left over. The government will forgive that remaining amount of debt. Now, the drawback is with the forgiveness, you may have a 1099 tax liability because they forgave the debt. Whereas with the public service loan forgiveness, you will not have a 1099 tax liability.
All right. We've got a call from Janice in North Carolina. Good morning, Janice. Thank you for calling.
Oh, hi, Maggie. Thank you, and thank you for taking my call. My question is regarding those of us who are middle-aged who still have student loans. I'm 56 years old. I have 4 degrees. My last degree was a master's in occupational therapy. And so, and I completed that back in 1998. I'm still paying off my student loan. I still owe about $45,000. Last summer, I learned through watching the Today Show that there was a company out in California that would refinance it at a lower interest rate. So I did that. So my question is, what is available out there for those of us that are middle-aged? I mean, I hear all this stuff about what's available for young people, but there's a huge number of us out here who are still who are middle-aged, still trying to pay off student loans.
You're exactly right. The average person that I consult is a middle-aged individual with student loans because after the mortgage crisis in 2007, a lot of individuals went back to school and obtained degrees in different industries and created new student loan debt. But the same advantages that are available to the younger 20s that are getting their degrees is also to the middle age as well. Now, it also depends on what type of loan you got. And it sounds like you refinanced your loan with a private lender at a lower rate. But when you did that, that kind of took away your federal benefits. The lender may have not told you that. If you'd have kept it as a federal loan and consolidated into a direct loan, and do you do any type of public service work or anything like that? Or
I'm an occupational therapist, and my company that I work for is nonprofit.
Right. You could probably, after you made 120 payments, which is 10 years, let's say you took a $45,000 student loan and they stretched it out for approximately 25 or 30 years. You're looking at approximately a payment of about $112, $115 a month. After you made 120 payments, while it was consolidated into a direct loan, and you're still at that same particular position, the remaining balance would have been forgiven. But when you go to a private loan lender, you can't do that because they don't have those programs available. That's why it's always much better to keep your loans with the government, but at the particular time you probably did it, those programs weren't available.
Correct. That's been, I finished my master's in 1998.
Right, so that program was not even available. But your position right now is the best thing. You did the best thing because you got a lower rate.
Right.
So the best thing to do is to pay a little bit extra if you can on every payment, which will bring the balance down a whole lot quicker. And the longer you extend it out, the more interest you'll pay. But for those individuals who do have federal loans from 1998, you can consolidate those into current direct loans. And once you consolidate them to a direct loan, if you're working public service or 501c nonprofit, get a low payment, get your loan forgiven. A lot of people are starting to get those loans forgiven starting in 2017.
Let me ask you something, Glenn. Can this work kind of like a mortgage does? Can she get an amortization, in other words, know what every single payment is and pay more toward her principal, which what the interest is by this time, the interest payments got to be crazy, but pay more toward her principal and just that and help pay it down?
That would work exactly, because with mortgage and amortization, math is math. The more you pay on the principal, the lower the less interest you'll pay in the long run. So if she do pay every 2 weeks or pay an extra $25, $50, or $100 per payment, then that brings down the principal, which is less interest being accrued on an outstanding loan. That is a strategic way to get that loan down as well.
Yeah, Janice, ask for an amortization of your loan from the people that you're paying, and you'll get to see exactly how much interest you pay per month and how much principal you pay per month. And what you want to do is pay on that principal. So if you have any extra money, pay on that principal and tell them that's what you're paying it on.
Okay, that's exactly my plan. Because when I refinanced last summer, I refinanced it down to 5 years, and my goal is to pay it at least within 3. Okay. So I'm gonna be eating peanut butter and jelly for 3 years.
Okay.
I want it gone before I reach 60.
That's the way to do it. Yeah, we made up that's what we did on our home and got it paid off ahead of time. So yeah. All right.
All right. Thank you.
Good luck. God bless. All right, folks, we're gonna take a quick break. Once again, phones are open. This man can answer questions. It is Glenn Smith, and he is with GuideWell Financial Solutions, a.k.a. the Consumer Credit Counseling Service of Maryland and Delaware, Inc. Stay tuned. We're going to be right back.
You're listening to the Maggie Linton Show on Sirius XM Urban View. We'll be right back. And now, let's join Maggie Linton on Sirius XM Urban View.
Well, welcome back. We continue with Glenn Smith. He's head student loan counselor with GuideWell Financial Solutions, a.k.a. the Consumer Credit Counseling Service of Maryland and Delaware, Inc. As we look at the student loan debt, what can the counseling service do for the average person out there?
Yeah, what we do is a lot of what we're doing right now has been support and getting information out to consumers what options they do have available. A lot of consumers are in what we call default. That's a $1.3 trillion worth of student loan debt that's out there, and the government is making a profit off student loans, but there's over like $70 billion that are actually in default, which haven't made a payment in like maybe over a year or even 2, 3, 4 years. So what's happening to the individuals who are totally neglecting it, just sort of what we call put their head in the sand, like, I don't know what to do. So what's happening to them is that sometimes they're getting garnished on their wages at work. They're getting their tax refunds intercepted because they have no idea of the options that's available to them. So what we do is give them the information, say, hey, you come out of that particular funk and you can turn everything around. You can consolidate your loans. You can rehabilitate your student loans and stop the garnishment if there's garnishing you in reference to student loans. But I think the biggest problem we have is getting information out to the public, let them know that you do have options. A lot of times when you have outstanding debt, like a credit card debt, or you can't pay your car payment, you're thinking, okay, what can I do? There's nothing I can do. They're going to come repossess me, and the whole arm of the creditor is going to come down and take everything that I got. But with student loans, it's a little bit different. You do have options. If you're in a financial predicament, the way the government has changed their strategy towards collecting student loan, where they're basing your payment amount on not what you borrowed, but what your income is. So if you went to school, you ran up a $100,000 student loan debt, and you're working at McDonald's, they'll give you a payment based on someone with a McDonald's salary, not the amount of debt that you ran up. And a lot of people don't realize that. So what they're doing is just think there's nothing they can do, which is the worst thing they can do is totally nothing.
And also the worst thing they can do is not communicate with the loan folks.
Exactly.
Because,
like I said,
yeah, go ahead.
Because the lenders will be calling, they be sending letters and mailing, and they just say, oh, I know what this is. I don't even want to deal with it. We call it just putting your head in the sand and just hoping that it'll disappear, and that's the worst thing you can do.
Yeah, definitely. We've got a call from Stephen in Indiana. Good morning, Stephen. Thank you for calling.
Yes, Maggie. Kind of surprised I got an opportunity to talk to you this morning. I've been listening to you for quite a while.
Well, thank you.
But my question is for the gentleman that's talking about the student loans. I'm a 71-year-old, as I said. I co-signed for my daughter as she was going through nursing school. She became totally disabled in 2011, and so the responsibility for repaying that loan is falling on me. The federal part of that student loan has been they've taken care of that, set her up in a program. On the private side, although they've set me up in a program, I'm paying quite a bit of money every month to be in that program. I'm just wondering just how much is available to someone of my that's of my age. That's a co-signer on a student loan. Just if you can get the gist of what I'm trying to say, I'd like to have the gentleman to talk a little bit about older people assuming, or not necessarily assuming, but have the responsibility of repaying student loans.
That's a great question. We get a lot of calls. You'd be surprised, from older individuals who are actually on Social Security or disability, and they're getting garnished from student loan debt they had 20, 30 years ago. And what consumers don't realize, that if you're on Social Security disability with the federal loans, you can have those loans discharged. You have to fill out a proper form and request it. They're not going to tell you, but if you don't apply for it, then you'll never get that particular deduction. But on the private loan side, if your income is totally Social Security disability or retirement income, those incomes are non-attachable. I should do collections. Ironically, I did collections for student loans prior to working for GuideWell, so I was on both sides of the fence. But with once you become a certain age, certain individuals in our country don't realize they become what's called we had a proper name for it, where it's like no one can garnish your debts cannot be garnished. So you're judgment proof. That's what it is. So if you have to determine, okay, if I can't afford these loans, what's my worst case scenario? Worst case scenario is that they may sue you. They may take you to court and get a judgment and try to attach something. But you got to realize, am I a judgment-proof individual? Do I own real estate and property in a particular state? You might have to pay those debts off. If you don't own any real estate, if you're just getting Social Security or disability income, then you might want to consider, do I really want to pay this loan? What can they do to me? They can't attach anything.
Because he co-signed for his daughter who is now disabled, should he shift it back to her because she is totally disabled?
Well, legally, he would have to sue his daughter if he pays it off. That's how it works in the court system. You got to sue your family member. Like if you co-sign a car for a family member, they don't pay and they garnish you, and you pay it, you have to sue that particular individual. Okay. But like I said, the private lenders are they're not working with us yet, but we're working with a lot of major private lenders. We're trying to bring out programs. Right now, most consumers, unfortunately, are at the mercy of the private student loan creditors. But the federal, you got like I said, there's federal ones were discharged and they gave them a break and let those go. But the private ones, there's not too much we can do with the private ones yet, but we are working with a lot of major private lenders. And if they come on board, we'll definitely try to let everyone know that, hey, there is resources with your private lenders now. Yeah. So like when the mortgage industry hit, first they did the FHA and the Fannie Mae and those particular loan lenders, and then the other lenders came on board. So we're in that process right now.
Stephen, I have to tell you, check with your Consumer Credit Counseling Service in Indiana. They don't charge. Okay. And not a private counseling service. I'm talking about the one that's run by the state, and usually it's called Consumer Credit Counseling Service.
I'll do that.
And see if you can't get some break, because like Stephen said, they're trying to work it out. Okay?
Yes, okay.
All right.
Thank you very much.
Thank you, and good luck. God's blessings on that one.
All right.
All right. Rodney from Maryland. Good morning, Rodney. Thank you for calling.
Hello. How you doing, Maggie? Hello, Glenn.
Good
morning.
I have a son that's graduating high school, and he's been accepted into a university that we filled out, his mother and I filled out the FAFSA, and he has received a scholarship that totals to about $20,000, and the full year would be $33,000. Now, on the award letter, he has something that's a direct loan, two of them, one that says one is subsidized and unsubsidized, and it doesn't cover the whole amount of the school year. I don't know what's the subsidized and unsubsidized mean, and I would like also some advice on how to cover the rest of the $13,000 that we would need for the school year.
Keep looking for more scholarships, but I'll let Glenn answer. Go ahead, Glenn.
You got that right. Well, the difference between a subsidized and unsubsidized federal loan is that one loan, the interest starts accumulating once she completes school. The other loan accumulates immediately. So the one that the government subsidized doesn't accumulate until they complete school. The unsubsidized loan starts to accumulate interest. So one of the options you can do is maybe a plus loan through the government if you want to help them out. That's a federal loan that you can assist. You can maybe do a part-time job, scholarships. That $13,000 is going to have to be made up some kind of way. And if you do a private loan, you got to be very careful that you're going to be at the mercy of that private loan lender once he completes graduation. And those, they are a little bit more expensive because they're private loans and they're credit-based as well. Whereas most government loans and scholarships are pretty much, because you're a citizen, you get that right to go to school.
Now, they did offer us a Parent Plus loan, and so that is a federal loan also?
Yeah, that is a federal loan, but the difference between a Parent Plus loan and his direct loan that he's getting is that your loan payments will begin immediately, whereas his loan payments won't start until he actually graduates.
Okay.
Now, you do get the benefits being a Parent Plus loan through a direct loan if you work. What type of work do you do?
I'm a tractor-trailer driver.
Okay, what kind of work do your wife do?
She works for the state of Maryland.
Okay, well, she works for the state of Maryland. You might can use that particular avenue and use that as a public service loan forgiveness for parents' loans to do that as well. And you want to maybe stretch that loan out for 20 or 30 years. And you may pay small payments after 120 payments. If she's still with the state of Maryland working 10 years later, you may can get that loan discharged, the amount of it. You got to have a strategy for when you take on these loans on the front end on how you're going to act them on the back end.
That's why I was calling in to get some to get a strategy.
Hey, GuideWell is there for you. GuideWell Financial Solutions. Go in and make an appointment and chat with them.
Okay, thank you so much. I appreciate it.
All right, Rodney.
Thanks for the call.
Yes, thank you for your call. Good luck.
All right, thank you. All
righty. Jimmy from D.C. Good morning, Jimmy. Thank you for calling.
Yes, I have 3 sons that I put through college. Some of the loans I took out in my name, and some of them I took out as I co-signed for them. The ones that I took out in my name when I became 100% disabled vet, the VA paid off $97,000 of the loans. But the ones that I co-signed for, the other $80,000, they would not pay. Do you know any way I can get around that? Because the loans were not in my name, I was just a co-signer.
Well, with like I said, those are probably private loans. When you co-sign a loan, they're normally private loans. Now, within the paperwork of that private loan, you have to read the entire documentation. Because part of it, the lender is not going to tell you that after your sons, if they made so many payments, you can do what's called a request for a release of liability. Sometimes it's 12 payments, sometimes it's 24 payments. If they've made 12 payments on time, 24 payments, it should be within the writing of the actual loan. You can write to the lender and say, hey, my son has made X amount of payments. I'm requesting that you release me of liability of this particular loan. They're not going to advertise it because they want to keep you on the hook as well in case he doesn't pay. But if it's in the letters of that particular loan you signed, request your release of liability and tell your sons, hey, you got to pay the bill. I can't do anything.
Okay, but there's no way I can get the VA to pay for the other loans.
VA normally helps you out to get you assistance with federal loans. What they can do is called VA disability discharge. Like I said, we're still at the mercy of the private lenders on the private loans.
No, these are federal loans. They just say that I'm not, since I am the co-signer and not the owner of the loans, they won't pay it.
What about your sons? Are they working, anything like that?
Oh yeah, they're paying the bills, but I was just trying to see a way if I could get the other $80,000 discharged like I did the $97,000. So
that sounds like an in-house VA program, and I'm not familiar with any VA programs that they're probably only a certain amount that you can get discharged. I'm not sure about the VA disability. But there is something called disability discharge. But if you've got them to pay off some loans for you, they're probably with government loans. It's probably a certain amount that they can pay off. You probably exhausted that amount. But most of the times when you co-sign, it's sort of like you're sure it's a federal loan that you co-signed and not a private loan. That's why they didn't pay it off.
Yes, I am. I'm sure it was a federal loan. They
okay.
didn't pay it off because it wasn't in my name.
My bet is go talk to them.
Right,
Nothing
okay.
beats a conversation. All right, Jimmy? Oh,
Yes.
Yeah, go talk to them. Face to face, or get your sons or whatever to go and talk to them and see. And also, like Glenn was just saying, read the fine print. There may be something written in there.
And if it is a private loan, I can ask for release of liability?
On the private loans, if there's a release of liability, you can see how many payments it takes for you to get a release of liability. If they've made those many payments, you can just call in and request it. They'll send you a form, you sign it, send it back, and you'll be released from the loan. Your sons will still have to pay.
Okay, great. Thank you.
All righty.
You're welcome.
Thank you. There you go, Glenn. A lot of good questions. Listen, I got Gerard hanging on, but I don't have time to go to you, Gerard. But I will tell you that Glenn and possibly someone else will be back here next month, and we're going because we need to still talk about student loans, don't we, Glenn?
Yes, we do.
All right. So there you have it, folks. Once again, Glenn Smith, head student loan counselor with GuideWell Financial Solutions, a.k.a. the Consumer Credit Counseling Service of Maryland and Delaware, Inc. Website, GuideWellFS.org. GuideWellFS.org. On Facebook, it's GuideWell Financial Solutions. Tomorrow, we'll chat about gourmet chocolates with Memphis-based chef Philip Ashley Ricks, founder of and CEO of Philip Ashley Chocolates. Plus, we'll learn about co-optation with Frank Ashrow with his book, A Primal Wisdom. You've been listening to The Maggie Linton Show. Thanks for all your calls today, folks.